Hello, welcome back. This is our next session. Open banking. Has open data increased competition and gone far enough? We have some esteemed panelists. I'll let them introduce themselves. Josh Liggett from OurCrowd is moderating, and it gives a great pleasure to bring them to the virtual stage. Thank you very much, Josh, and take it away.
Thanks, Johnny. Thanks everyone for being here. Really an amazing panel that we have today, with a few truly, experts in the field of fintech who really know a lot and can really provide a lot of insight from experience growing companies, building companies. Hopefully, our third panelist is having a bit of a tech problem. His computer bricked, so we're working on a workaround. I'm Josh Liggett. I'm a principal at OurCrowd, focusing on fintech. Had the pleasure of working both with Dorel and Saar in the past, so it's my pleasure to be moderating the panel. Dorel, you want to introduce yourself first?
Yeah, hi everybody. I'm Dorel Blitz, VP Strategy and Business Development at Personetics. Thank you for joining us today.
Thanks, Dorel. Saar?
Hi, Saar Yahalom. I'm a CTO and co-founder at Rewire, challenger bank for the Migraines section.
Awesome. Thanks, everybody. So first of all, you got two startups here that just raised pretty big funding rounds, which is pretty awesome. Later stage companies doing some really awesome stuff. And we're talking about challenger banks and why they fail. So, we're not going to focus on pink or blue or red or orange credit cards and all the fun, and all the KPIs that, we hear about all the time, but rather, why do they actually fail? Get a little bit into business models, the stuff that actually matters with building a business. And Dorel, just to start with you, we've had, it's been a mixed bag with the first generation of challenger banks. There've been some that have been successful, some that haven't. We've seen big rounds and then down rounds afterwards. Why do you think we haven't seen challenger banks really being what what everyone thought they were maybe 5 years ago?
I think the reason for that is a couple of things. First of all, banking is all about trust. Banks are not really selling money, they're selling trust, and it's a very psychological thing to deal with money. And I think it's really hard for customers when it's dealing with money to go after those kind of virtual, if you will, challenger banks, and really to bank with them. And I'm not speaking about opening a card account or taking a loan. I'm speaking about really bank with them. And the second thing is about people like me, not millennials, not Generation Z or Y or whatever. I'm speaking about, the profitable customers of a regular bank, which is the mass affluent customers or the small business customers. And I think those kind of, heavy lifters within the banks, it was quite hard for them to really, think and moving into another bank where actually the differences are quite small. And my argument for today will be, what's in it right now for those kind of challenger banks? Why they're actually existing, and what is the reason for that? And why customers, again, profitable customers, will move into these banks if it's mostly still providing the same product, the same services, maybe just with a nice, better, user interface. And I think that's the question here. I think after the big hype in the market, customers are really asking themselves, and they're looking on the Chime and the Nubank in Brazil, or Tinkoff in Russia. Some of the world large, or Starling Bank. I don't know if you saw that. Just Goldman Sachs just invested $50 million in Starling Bank, and I think a lot of customers are really asking themselves, why should I right now move my banking, or why should I do some of my banking with this challenger bank? What am I getting out of that? If it's only fees, so it's a race to the bottom. The big existing customers, the big existing banks can provide a much better fees, or even a zero fees. If it's only a better UI, UX, that's not maybe the best idea. If it's the same product, so what's in it for me? And I think that's why we are not seeing any big movement today into these banks. So when Chime, for example, in the US, is right now speaking about 12 million customers, do they really have 12 million customers? I would argue that I'm not sure about it, and I don't know how they're actually counting 12 million customers. So yes, there are challenger banks globally, something like 150 of them globally, but the question is, when it comes to business models, cost-income ratio, customer acquisition cost to serve, I'm not sure, they have enough capacity, enough bandwidth, and enough unique value proposition to really get people like me or Saar or you, Josh, to actually bank with them. And I think that's where we are seeing a lot of down rounds, like you said, Josh, to actually get the right appreciation in the market. Saar.
It's interesting you say that, because what they, the stats that are published are customers, these broad numbers, not percent of customers using direct deposit, balance, because the question is somebody using a challenger bank as their third, fourth, fifth, sixth option, bunch of cards, and I just happen to use a challenger bank. Maybe I use my challenger bank just to transfer Forex from, the UK to the EU for one little thing, because like you said, there's not really a need for everybody. Saar, I know even from Rewire's, beginnings, you sort of had that, fortunately, you had the answer already solved. And Dorel, I think you actually were one who turned us on to Rewire at the beginning, which I just realized now, which is really funny, back, I think, 3.5 years ago. So Saar, can you talk a little bit about, with Dorel saying that, what's in it for the customer? What did you find, even at the beginning of Rewire, what's in it for your customer, and how have you been able to grow, off that?
Yeah, I think it touches directly to the points that Dorel made. We kind of went the other way around. So when we started, we started with regular remittances and simple cross-border transactions, and we actually saw customers abusing, so to speak, our system to kind of store value, and we saw other kind of behaviors that were unmet needs that they got from their existing banks. So we had a very clear path of now servicing those customers and giving them exactly what they want. But I think the main difference is, when you look at big challengers banks, they go for the average European, the average American. They want to bring the new millennials. We actually took the underserved population, which didn't get what they need from banks. And banks don't really want them in their system, because they're sending most of their salaries back home. So they're not very interesting. For them to find a business model around our customer segment is pretty hard. They're a cost-based. For us, it's very easy. We started with the business model, and now we're adding additional services where we know they already need them. So it's kind of the other way around for us. So we're building where we see the need, instead of offering something without fees and then finding out where people are going.
So I think it's interesting that you said, which is, and this is a question / comment that already happened in the chat section. Please, if you have more questions, we'll more than happy to save some time in the end or incorporate them even as they go. But the focus on, a good UX, a good UI, which is really important, obviously. Saar and Dorel, both of you, really important. But that doesn't change the fact that you might be losing money on every transaction, which leads to bad unit economics, bad, LTV, bad, high CAC, bad payback periods, and down rounds, and high valuations. And then, obviously the public markets are pretty crazy and can tolerate a lot of pretty crazy stuff right now. But the question is, how long is that going to last, and to what extent will that last? So, both Dorel and Saar, what do you think about the combination of balancing growth UX versus, needing to have a business model that right now maybe isn't the best, but you're hoping for the best, that eventually over time it grows?
Dorel, I'll let you start, and then I'll pitch in.
No, I think, again, it comes back to the same question. It's really about business model, and I think first of all, I do agree with everything Saar said about underbanked, and I think what Rewire is maybe trying to do is really go into the unserved customers, and I think like almost third of the world population, even more than that, it's unserved. So there is an untapped market here. My argument is how you can make sure that you have a sustainable business model with these, millions of unserved customers. What is the average revenue per user, or what is the lifetime value, if you know what I mean? What is the LTV model out for each one of these customers? Listen, there is a lot of broken problems within the banking industry, no doubt about it. But I think that what we are seeing right now is a big challenge for these challenger banks, is really how they can truly differentiate themselves. And I think, we as Personetics, we are a global leader in data-driven personalization and customer engagement. We are in production with like 55 global banks, including some of the world's largest challenger banks. And I'm telling you, the differentiation is really coming from the engagement itself. It's not coming from it's not coming from the products. It's not coming from the services. It's not coming from the UI or the UX. Because at the end of the day, banks are selling the same products: loans, deposits, money transfer, and investment. It's not going anywhere. But what is really changing is how banks can really increase the conversion rates to better sell, to better service on the first-time approach or the second-time approach, and that's exactly where we are seeing the differentiation coming. So when you are looking right now on the customer acquisition or the cost to serve or the cost-income ratios, I think it's mostly coming from the engagement capabilities, how banks can really differentiate themselves by becoming this, as we are calling that at Personetics, self-driving finance. How banks can really proactively and smartly even engage with customers and helping them to reach their financial goals. And I think it's coming from the relationship perspective, from the engagement perspective, less about the specific products, the specific services. In the end of the day, it's mostly the same thing. And we think, and I like your comments, Josh and Saar, because at the end of the day, it's really about the numbers and the business model, and not about fluffy marketing activities. We saw what happened, everybody saw what happened with Lending Club 2 years ago when they tried to compete with American Express in the US market. American Express just kicked their butt with this, customer acquisition cost. And we are seeing today how much money it takes to acquire customers and to maintain them. And it comes back again, how you can make sure that you are truly bank with your customers, not just having a credit card, like you said, Josh. And I think it really comes from a much deeper, proactive and smart engagement. So there are 4 steps in our perspective, is how you can truly, as a challenger bank, how you can truly know your customers. And again, our topic is not open banking, but I do have to say, open banking, it's an amazing, amazing innovation. It's an amazing opportunity for all the industry to truly, finally, understand your own customers. So I think that's really important, how you can truly know and understand your customers, and to really leverage, as any bank like Saar, to leverage your biggest asset, which is your own customers' financial transactional data. That's what we are doing at Personetics. The second part, once you are truly know and understand your customers, how you can truly drive an ongoing personalized or hyper-personalized engagement and relationship, which is much more proactive, smart, and knowledgeable, not just waiting for your customers to do something, but really truly know and understand and anticipate your customers' financial needs and helping them to automatically achieve that. And I think the automation part is really important. How you can make sure that your customers are moving from FOMO, fear of missing out, into JOMO, joy of missing out, and you as a challenger bank can really think and act upon that. And once you are doing that, yes, you can bring your product, your services, your automation capabilities, but drive this consistent customer journey, proactive and smart. We believe that's maybe the only option right now in the banking space, this autonomous finance or self-driving finance, to reach the business models that challenger banks are going after.
I think I can add something that is, I think there was a lot of optimism around the fact that people will just switch and will move from their existing bank or existing solutions that they have now to a new things. But when you look at your phone, you have an Uber app, and you have Get, and you have Lyft. You have all of them. You didn't pick one. You have your favorite, but you have all of them. And I think that's where we're heading. We're heading to a place where you're not going to have just one account. You're going to use Revolut for your travels, and number 26 when you're doing business, and your whatever, your retail bank when you're doing everything else. And I think challengers have to understand what their unique value is, and what the willingness to pay for this specific product and charge for it, and be best at that. Kind of to Dorel's point, you can be good at everything, especially when you're fighting incumbents that've been doing it for years. They already have the value propositions, they have the channels, they have the distribution. You really have to pick why you're going to be better and in what. It brings us into more vertical kind of banks that specializes in specific value. That's kind of where I think we're going to see challengers kind of moving and focusing. And to the other aspect, it's probably we're going to see a lot of bundling. So we're already starting to see that. So challengers adding more verticals in to kind of make additional revenue. Again, if it's too easy, everyone is going to do it. And again, you're going to have a big mesh of more of the same. So that's it is a hard problem.
I'm just raising one comment. This is from Yolanda. I think she asked a question. Again, when people are switching or moving, or millennials moving into a challenger banks just because a much easier way to open a bank account or some UX apps or some very basic PFM functionalities, this is not enough. It's not enough. And what we are trying to say here, first of all, Josh, again, it's all about the numbers. But if you're, I just finished a really long due diligence. You know, we raised $75 million from one of the world's largest private equity firms. So I went through a lot of due diligence recently, but I'm telling you, it's really about what is the value, what is the basic value that customers are getting on an ongoing base. So it's not enough that it's really cool and nice to open a bank account. How many times you're doing that in your lifetime? It's not enough if you're getting a very, very basic, you know, data categorization and a pie chart of your spending. This is not about that. So the question is very simple. If banks are going to sell, are still selling the same products, the same solutions, what is the difference? If it's the same pricing, so what is the difference? If it's really about the engagement, if it's really about the relationship, how can banks can truly differentiate themselves in their relationship? How they can truly move from a passive into a smart, proactive, knowledgeable approach, and how they can quickly do that. And I think that's the question for challenger banks today. If they really want to survive, they need to differentiate themselves on the engagement, on the relationship, not on the product, not on the services. And by the way, I have not seen any good marketplace business model in the market. So it's a big buzzword, marketplace, bank as a service, whatever you want to call it. But the reality, no one is really excelling in that. It's not such an easy thing to provide products and services from others and try to renegotiate or to bundle things. So the question comes back to the very basic fundamentals of any bank. What is the relationship? What is the value? How you can actually make money out of that, of the relationship-based capabilities, and not just from the products. And again, coming back to our offering as Personetics, that's exactly where we are really excelling with the world's largest banks, because we understand that that's the basic fundamental, how you drive the engagement and monetize as a part of that, or even better, monetize your own product and services.
So, I mean, to continue on that thread, first of all, I'm going to put a poll out. Has anybody actually used the Challenger Bank? Which will be funny to see, you know, if anybody, you know, how many people have used it. But Saar, just one of the things that's interesting, I think, is a function of fintech in general. You know, you're what we might be seeing now, and what I've started to see in the market a little bit. Love to hear your thoughts. Is the you know, the getting into more segmented challenger banks, not just like, oh, I'm going to create a digital version of JP Morgan Chase, or I'm going to, you know, whatever it is, I'm going to go after a niche, you know, a niche, not necessarily a product, but a niche market. And because of fintech and because it's finance, these TAMs are just absurd. You know, basically every niche that you cut in fintech is bigger than most other markets, you know, combined, just because, you know, welcome to fintech. So first of all, is a question of what you've already done at Rewire, which is find the segment that's not underbanked or / underserved, whatever term you want to use. You know, how deep do you see that market, and how many services do you think you can offer that market? And second of all, what do you think about other challenger banks, sort of not necessarily in your market, but also going after that niche play? You know, what do you think about that general concept?
Sure. So at our space, it's when you think about migraines, their most or the biggest transactions are not actually happening where they're living right now. So they're building their future back home. And when you start to kind of understand that segment, you understand that the opportunity is actually on the cross-border angle. So they do the same thing as the average Joe. So they take mortgages, they save toward their future, they do investments, but they have to do it from a different continent. And that's where we see our biggest value or the biggest opportunity, because we act as acquisition channel, and we work directly with the biggest bank in their home countries to provide services that those banks actually already know very well. They know these customers, they already have all the models, they have the products, they just don't have the acquisition arm. And what we can do for them is basically bring them on, do all the regulatory stuff, and make everything available with their correct UX, with the correct language, and expose those kind of services. And that's where we see the biggest opportunity, because we have a really straightforward growing path for new products. So we can start with the simplest, which is cross-border transactions, move on to savings, move on to microloans, to insurances, to mortgages. So we have a very clear path of where we want to get to, and it's pretty much laid out. I think for other segments, they need to really understand their target audience and where they're not being served right now. Where is the unmet need, or it's too complicated at the moment. So it can be either professional services, for example, where you don't get exactly what you need from your bank, you need something else. And if you focus on that specific market, like you said, it's a huge market. You can now offer very limited new services or existing services and serve them better, and you can tap a huge audience. But you have to bring value right away, and you have to do it better, significantly better than the existing bank. And I think that's where the challenge is. And that's that's what we're been focusing on, and it's hard. Like bringing this value and building those solutions, it's not a simple thing. It takes time, but when you actually check the need, you see there's a lot of demand for those kind of products. So that's where we're at on our journey.
Thanks so much, Saar. So I had a conversation with a founder once who told me that if a challenger bank, who said, I think it was one of the most interesting comments, who said that if I try to play on JP Morgan, B of A, Barclays turf, I'm going to get hammered and they will crush me. So I need to play on my own turf and do something different. The problem with that, Dorel, I'd love to hear your thoughts about this also, Saar, is it seems like these challenger banks haven't been disruptive enough. Like they haven't been offering things that are too out there. So they're offering a savings account, they're offering a checking account, but more than just what's in it for me, and the trust is I need something is UX enough? I don't think it is. I think you need something that's way out there. And one of the reasons why, actually, which is a shame that David isn't here from Jasper, which is Jasper is working on some crazy stuff in terms of cashbacks, in terms of savings, in terms of returns, really trying to offer crazy stuff out there that also makes sense from a dollars and cents perspective. So question number one, for both of you is it that challenger banks haven't been, as weird as it sounds, have they not been disruptive enough for open banking and the fact that I can have all these embedded finance and all these different things and I can pull things together? And number two is if they haven't been, then what can they do?
I think we need to pay attention to the market dynamics, and we are in a very conservative industry. Let's be honest, at least for ourselves, about it. Things takes time. Even open banking global usage is 0.0005%. That's the reality. Even in the UK, the actual usage, and I'm telling you because I'm working with most of the largest banks there, the actual usage of open banking is really small, and the reason is very simple. Why the hell customers will connect their external bank accounts with their own bank? What are getting out of that? There is not any business model here. Let's be honest about it. And I think it comes back to the same question. Listen, I don't know Jasper, I don't know what these guys are doing, and I'm sure they have some crazy stuff, and that's great. But in the end of the day, I think what is really important for customers, it's not just UX, UI, or opening a bank account and they can tell their friends about it. It's not just about the branding or the vision or the story. It needs to be much more than that. Now listen, people in most of the days, people don't really care about their finance. People don't spend the whole day thinking about their money and their issues. People have a very basic and specific needs. I'm sure that all of us, all of you guys know Professor Dan Ariely. He speaks about it for a long time. He's also a board member at Quapital, which is a nice fintech in the US. And he's saying the same thing. People don't care, and you cannot always teach them all day long. So what is really important here is to understand the fundamentals, the social contract between banks and their clients. And the social contract is very simple. Banks are trying to make money, they are doing their business, but in order to do so, they need to better help proactively and smartly their customers to better manage their financial life, to stay on top of their finance, to be there for them, to anticipate their needs and even act upon it. That's why we are calling that self-driving finance or autonomous finance. And we believe this differentiation, this biggest trend maybe in the banking business, moving from passive to proactive, this engagement, this relationship is the one that will be able to help challenger banks, if you will, because they are much more innovative and fast to adopt, to really differentiate themselves and then to drive a much better selling opportunities. Because what we saw is when you are truly anticipating, when you are truly understanding and analyzing in real time your customers' financial behavior, when you are truly developing the ongoing, personalized, proactive, smart journey, when you can reach your customers with a timely, contextual insights, alerts, recommendations, product-based advice, even automated, self-adjustable financial wellness programs, when you are combining all of that, you can reach 6 times higher conversion rates in selling and servicing your customers. And this is where you are winning as a challenger bank, because then everything we said, customer acquisition, income ratio, all of that is falling behind. So again, it's all about not just developing a niche product or a niche saving or deposit, which is also relevant to a niche customer base. It's about the engagement. It's about the whole concept of what is the value and how challenger banks, if you will, can change the fundamentals, the relationship in this market, and take that to the next level. Then they will be able to better monetize.
I agree. I can give the complementary is all customers have their life goals or their direction, their financial status that they want to reach. And like Dorel said, that they're not really working towards that, or it's very hard to get to that point in your day-to-day life. And I think challengers banks or niche banks have to really understand the target audience and kind of help them reach those goals. So let's say, for example, in our audience, if we don't also take care of the family members, we're not doing our job, because they're a strong part of the reason why our customers actually left their home and moved to a different place. So they went there to support their family. So if we don't bring the family members in and actually treat them as well, we're not supporting that life goal of saving and empowering towards a better future. And I think everyone, when you start to look at the customers, have their goal, whether it be going to be their next vacation or their dream home. And I think when challengers banks start to actually help customers reach that, I think they can do a much better job than traditional banks, because they have more utilities and more tools to kind of analyze it and help you work towards that. And we haven't yet seen products that helps you kind of capture that.
So it's a term that I like to joke around about called bank splaining, which is when you have I remember a little bit a while ago, JP Morgan had a tweet that came out, like making basically people complaining about they don't have any money in savings and saying, well, stop buying Starbucks and don't take a cab and don't eat out. And then people got really mad at them because I want my Starbucks and I want to eat out. And I think, all of us have been waiting for that holy grail of financial education. It's probably the hardest thing to pull off, and Capital's been working on it, and Acorns and Stash and Robinhood, sort of, maybe, I don't know, you know, a lot of different companies working in a lot of different ways on how to do it. So from a perspective of, you know, Saar, from you, from, you know, the unbanked, underserved market, and Dorel from the overall general market, you know, how much do you think is, you know, how do you see trying to actually get through to people to, like, on financial education, getting them to actually, you know, listen, you know, to things, and how do you sort of, similar to when a dog needs to take medicine, you have to, like, you know, sneak in the financial education, you know, without people knowing it. How do you accomplish?
I think following what happened during the COVID, we're still in the COVID-19, I think people are, you know, there are all sorts of segments, all sorts of people, right, globally. You can't speak about global in one sentence, but I do think, you know, that financial resilience, not financial wellness, financial resilience, that's the important issue. People, they want to go back to their previous life. They want to increase their financial resilience, and they are expecting, again, it comes back to the social contract. They are expecting their banks, their financial institutions to be there for them, helping them to recover. And I think in that space, in that kind of relationship, I think challenger banks and absolutely regular banks can take a much better, strong foothold, and in this environment to better educate, if you will, in a very implicit way, not just to send articles, in a very implicit, ongoing, hyper-personalized way, try a little bit to educate their customers, try to become, as I'm saying for over 6 years, trying to become this real-time, cool friend, trusted advisor on the go, helping customers, helping people just to better manage their life. And I think if you are delivering the right capabilities, the right journey, you are doing it with the right way, with all the back-end technology, with the right implementation within the existing channels, not as a standalone,
exactly,
then it makes sense, and then you can monetize that.
Yes, on our side, we're building, it's very similar to what Dorel said. So we're building lanes that helps you do the right thing. So it kind of direct you already from the get-go to make the right choice. And when you actually choose to do a transaction, now is probably the right time to tell you, okay, you can do it a little bit better. Here's a better way to do it. Or even get back to you after you've done something, and here's how you can save 10% the next time you do it. So that's kind of what we're trying to do. We're not trying to change the behavior or introduce a totally new, disruptive way of doing things. We're trying to take the already existing behavior and improve it. So that's it's a loop. It takes time, but that's the way we go it. And we have a very broad approach, from product to influencers to awareness and education. But it starts from kind of directing people to the right place.
I think we have like 1 minute left, so I'll ask like a one-sentence answer. So are we bullish or are we bearish on the next generation of challenger banks? I'll say I'm bullish, but I'm waiting for that one good one. I'm waiting for that one good one to really, that I'm bullish on the migrant section of like, you know, obviously because of our relationship with Rewire, you know, but I'm bullish on certain segments, and hopeful that someone's going to figure it out on the broad scale of how to pull it off. That's what I would say. I don't know about. I'd love to hear your thoughts.
I tend to agree with you, Josh.
Hey man, come on. Controversy, let's go.
Yeah, but guys, I mean, we are seeing right now so many conversions happening right now, you know, in the banking sector. Just yesterday, another 2 banks in the US merged, and these kind of mergers are keep coming and growing. And I'm guessing, you know, we are going to see, at least in 2021, at least 2 or 3, you know, top-tier banks are going to acquire some of these challenger banks, maybe, just to get access to some talent and some maybe technology or some ways of thinking. But I like you, Josh, I am waiting to see if something is popping up which really takes to the next level. I can tell you, at least from the work that we are doing at Personetics, we are seeing that in Asia right now. By the way, we have a big webinar coming up next week with digital banks in Asia. So in Asia right now, for all sorts of reasons, some of these challenger banks, or even, sorry to say, even mobile-only sub-brand digital banks, not maybe the challenger banks, some of them They are actually getting the right understanding, the right strategy and vision, and taking that to the next level. Hopefully, we will see some of these coming from Asia before maybe Europe, before the North American ones.
Saar, last word. I know Johnny's here to shut us down, but last word.
I'm very much bullish on challengers where the business model makes sense. I think we're going to see more of these, and I think the ones that pretty much answer to all are going to be either acquired or dissolve.
Amazing. Thanks so much. Thanks so much, Dorel. Thanks so much, Saar. Amazing time. Thanks, Johnny, for having us at FinTech Week. Really appreciate it.
No problem at all. Thank you so much, guys. That was incredible. That was really enthralling, and thank you for sharing your knowledge and insights with us. If the audience have already been doing it, but if you can show your appreciation with our emoji app, a round of applause for our audience. Thank you very much. Where do we go from here? From after this such a panel, but we have got the answer as well. Our next panel is looking at open banking, so please stay with us. I'm going to get these guys off stage because they need to go back to work, and I'm going to bring the next panel on, so please join the next session. Thank you again, Josh, Dorel, and Saar. Until next year.
Thank you.
Thank you.
Thanks.